Joining me today on the spot is Gary Wagner. He's the editor of goldforecast.com and a technical analyst. Gary, so happy to be reunited with you again.
Absolutely. So good to talk to you and hear from you, Daniela, today. How are you?
Great. Thanks, Gary. So basically, I've spoken to many analysts who have told me, watch for gold to go where the US dollar doesn't. But on Monday, the US dollar was down, so was gold. What are your thoughts?
Well, I wish I could give you a clear-cut answer. It's certainly perplexing to say the least, but, we have seen gold historically react as a safe haven investment. And recently we've seen kind of a change in that sometimes it reacts as a risk on or risk off investment. In this case, you see risk off taking gold lower today.
So Gary, most people I've spoken to have said that it's mostly Europe weighing on gold right now. What are your thoughts?
Well, that's also interesting because historically I've told my subscribers that if Europe continues to get in trouble, we're going to see a bullish reaction in the precious metals markets. And in fact, some days, including yesterday, we are getting really the opposite effect of that.
So which other factors do you think are having an influence on gold right now, Gary?
Well, the sovereign debt crisis, of course, is critically important. I think that one thing that here in the United States and Canada that we've overlooked is the budget deficit that the USA has right now. It's huge. Now, although it's equal to our GDP at 15 trillion, that's still a large number to bite off.
So the Fed is meeting this week, Gary, so we might see a reaction there. But looking at your charts, what are some key numbers you're looking at for gold right now?
Well, we're really at a critical level. In terms of a technical basis, we've identified what is called a triangle correction. And a triangle correction is a correction in which, and this is Elliott Wave chartists, but where you're not getting what's called a straight A, B, C down. Rather, you're getting a compression of a series of lower highs and higher lows. The thought behind it is, as it comes to the apex, you will typically get a hard break to the prevalent direction of the trend, which in the long term is up. So the critical level right now is 1,600 and 1,611. Really, a basis cash really needs to hold those areas for this triangle correction we've identified to remain intact.
So if it hits that 1,600 level, Gary, what does that mean?
Well, hopefully we'll find support in that area. We've tested it on a few occasions, and on each occasion, it's had some resilience. You've had safe haven buying coming in. You've had buying the dip mentality coming in at those levels. But you're correct, Daniela. It has been really quiet, and so we don't really see it bounce off those areas as much as just test those areas.
So, Gary, would you say you're still bullish long-term for gold?
Long-term, I am bullish, but we have a extended corrective period that we're in right now. And until that is completed, we're not going to see a major run-up in gold. However, I think that we're getting closer to that area than many analysts believe.
So some get scared when we do enter these corrective periods, Gary. What would you say to them?
Markets never go straight up or straight down. And even a market that is ascending tends to do it in a stair-step manner. In other words, it moves up a little bit, retraces, moves up and retraces. I think that as gold traders, we have gotten so used to these parabolic rises that when you see a market go into a range, which is what we have seen for the first time in years, gold has really gone into a range-bound cycle that we're not used to it.
So, Gary, if we switch our attention over to silver now, what's happening with this metal?
Well, silver's been even quieter than gold, although on days where gold is up, you'll have silver outperforming it. But on days where gold is down, you have silver outperforming the down days. It outperformed in terms of a percentage gain last year. I think that silver has the opportunity to do that again, but it is sluggish. And when you look at the fact that there is economic slowdown in China right now and Europe, and the fact that silver is tied as an industrial metal to these markets, if we have a continued a scenario where we have a sluggish global economy, you're not going to have silver perform quite as well as it did vis-a-vis gold.
So key numbers for silver, Gary.
30.52, 30.48 critical support area, needs to hold that area. $33 on the upside is being resistance.
Fantastic, Gary. Final thoughts for investors watching.
Markets do not go straight up or straight down. And typically, when the markets are under pressure, there are professionals that are actually buying that as the public sells those metals. So realize that in the long run, when you take a look at a historical chart of gold, it has made a tremendous move upward, and it took a while to get there. So a correction can be protracted, but patience is a virtue, and I think that that virtue will help a gold trader in the long run in these markets.
When you say there's professionals involved, could you elaborate on that, Gary?
What I meant is that it's a pari-mutuel game. For every buyer, there's a seller. And when the markets are going down, typically you have the public coming in at a point when the professionals are unloading. That's all I mean.
Gary, thanks so much for your thoughts today.
You're very welcome, and you have a great day.
And thank you for watching this edition of On the Spot. You can email me at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.